Friends, in this video for iThought Advisor, I am going to talk to you on a topic, the world of impersonal finance. We are all grown on the name personal finance, but the last 5 years has seen the world of personal finance become increasingly impersonal. So, I am going to talk on the world of impersonal finance because millions of people today deal with the subject very impersonally. So, they rely more today on technology than on people. So, this is a paradigm shift which has happened in the last 5 years, and I am going to talk to you about some of the things that I felt are important to be spoken about. First, my experience in the world of personal finance revolved completely around people. I became an investor because somebody held my hand and brought me into the world of investing. I survived the most difficult times in the world of personal finance, a stock market crash, all sorts of change, losses, long periods of negative returns, lack of belief in asset classes, various things which kept coming one after the other. I survived mainly because I had people around me who ensured my survival, held my hand and guided me when it was needed the most, and in my early years ensured that I got imbibed with all the things that would ensure longevity and success in my personal finance. Now contrast this with what I see in the last 5 years, and I see that personal finance has changed a lot, become extremely impersonal, and people believe that they can manage their personal finance without people. Now, the basis for this is still untested, and if you look at what those who benefit from this transition to impersonal finance speak, their contradictions are very unmistakable. I am talking about the platforms. If you look at what some of the newer platforms tell you, they say that they would be able to give you AI-based experience with superior UI. If you look at what the first mover, and I will not name the first mover specifically, if you see what the first mover says about all the subsequent movers, the first mover questions the quality of AI, saying that it's not AI, it's bunkum. So essentially, if we find out the paradox and the contradiction between various platforms, I find that this whole thing is marketing spiel, and you have not created what it takes to convert the experience into something reliable. So, except transaction reliability, there is very little that's happened due to platforms in the world of personal finance, and all they have done is made it completely impersonal and distant, because in a difficult day you are alone, and that's not how personal finance grows in a person's life. Survivorship happens because of the personal side of personal finance. It doesn't happen because of technology, and that is something which a lot of people are realizing, and something which a lot of people will realize going forward. So, all this transition, the creation of this religion almost of people who believe that people don't matter, is based on only one aspect, and that is cost. They are cheap, Technology gives you a cheaper solution, therefore I go with the cheapest option. This is where our understanding of cost itself must be questioned. If technology allowed you to identify NASDAQ funds as a great buy through the second half of last year and the first half of this year, then you must question the intelligence of that technology. And if you saved 1%, yes, that's all you would have saved. If you saved 1% because the technology enabled you to transact cheaper, what is the cost of making a bad choice? That's many times more. In the case of a tech fund, it could be as high as 15 times the transaction saving. In the case of NASDAQ, it's 30 times. So you saved 1% to lose anywhere between 15 and 30%. This would not happen if you approached investing in the traditional way personal finance ought to function, because a person would have stopped you and told you, no, this shouldn't be done. So, technology-based impersonal finance has led you into a dark world where you are alone and erring all by yourself. I'm sure you will immediately think, what about what I did right? When you make 5 things, you will do a few things right. But remember that the wrong things take away the benefits from all the right decisions. So your mistakes inflict a cost on your correct decisions. And effectively, the quality of your accomplishment goes down. Sometimes it becomes negative too. So if you look at what has happened in the world of impersonal finance in the last year or two, a lot of people came in. So they were very welcoming. I don't think this many people could have gotten in the traditional personal finance world in the traditional way. So technology enabled to onboard more people than we could ever have done. But what technology has done is keep them captive to non-existent AI and overrated UI. It has not helped improve the quality of investing. It has done very little to educate investors and make them better at what they do, and it has also encouraged, nudged a lot of investors to do what they should never do in their personal finance. Some of these I'm going to flag are taking leverage, trading more, relying more on options and futures, investing in Bitcoin, not having a proper asset allocation, not following a proper portfolio curation strategy, creating an imbalance in investment, not being disciplined enough to build holistic personal finance. All this has happened with the best user interface. Now, what use is user interface if you're not able to get the best in your investing? I'd be very happy to use a land phone and still make higher returns than have the best technology in my phone and make losses, because these mistakes are happening all alone, and the number of people making these mistakes is unbelievably high. So this is a function of how more people got in than usual. So more people are making mistakes than usual. So this is a very, very disturbing trend that I see. And you are being preached as to how you made mistakes by the very platforms, which I think is a dark irony, because the beneficiaries of your coming into the market, in fact, the only beneficiaries are the platforms. You are yourself not benefiting enough, and at this point being preached to is a little bit harsh. I would not take kindly to it if I were an investor. This whole thing has become so impersonal that only the institutional imperative matters. There is no investor centricity because you have not paid anybody to take care of your interest. And what you have paid for is for user experience. That's what you bargain for. And as a result, your investing is completely impersonal and you are putting your money in the world of impersonal finance. I would not do this ever because I would always want to have the best advice in the early years of my growth because I got it and I know the benefit of getting it at the right time, at the right place. And I also had go-to people to take guidance at every point in time when faced with a crisis. Crisis is a time when investors get outed from the market itself. It's like a kabaddi game where if your opponent touches you, then you have to leave the field. Similarly, if you go and make a few big mistakes, you end up leaving investing itself. I don't think any person should meet that fate. And the world of impersonal finance is sending out people from the world of investing in more numbers than it has ever happened before, and that's something which is hardly spoken about. So that is something which is purely due to the institutional imperative that prevails in the world of impersonal finance. Everything is volume based and transaction centric, whereas I believe that personal finance should be value based. You must work on a bedrock of values which safeguard the investor, and you must ensure that the investor gains not only in monetary terms but he also gains behaviorally, because eventually to have a lasting successful experience in the world of personal finance, behavior is everything. And it is in this area that the world of impersonal finance has failed, continues to fail, and will fail all the more as uncertainties go up in the world around us and investing becomes all the more challenging. And that in essence is why I think that you must make a transition from the world of impersonal finance to the world of personal finance, where you will be guided, your hand will be held, your behavior will be improved, good values will carry you forward on your investment journey, and you don't become transaction obsessed and become wealth focused. So all these things have to happen and somebody has to take responsibility for that, and that can happen only in the world of personal finance. And it's time for you to take a call on whether you must stay in the world of impersonal finance. Thank you for watching this video.